Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. Welcome to another exciting video of Options Trading for Beginners, brought to you by the Stock Options Hero. Welcome. So today, we're looking at our PL day. So PLDA stands for profit loss for the day. So we're up 444 and PL open 500. Net lick 108,544. Cash and sweep 115,333. So let's see. Riot used to be one of our losers, now it's turned into a winner. So real quick, let's look at our biggest losers. So IoT, yeah, not too nervous just yet. So the short strike, we've got a 2250, still out of the money, but it's getting real close. I'm hoping it will turn down and trade around 18 per share within the next few days. And if not, we may end up rolling the trade. We haven't rolled anything yet, so it would be good for you to see that firsthand. AZN 75 call. Okay, so this one is in the money by 91 cents, but the doji is telling me there's some indecision, and when it's at the top of a rally like this, it usually indicates a price reversal. So, not worried at this point. On 35, let's see. Okay, not liking that at all. Somewhat concerning. So, let's see. So 50-cent net credit. Yeah, so let's cancel, replace that. And let's get out where we got in. So basically wanting to break even or scratch the trade. So we collected 70 cents, paid 20 cents. Net credit was 50 cents. The open order is sitting out there for 50-cent debit. So we took in 50 cents. It's going to be closed, hopefully, for 50-cent debit. We'll just be out the commission. So I don't know about you. I would rather lose a few dollars in commission as opposed to a $500 loss. So, and let's see now, adjusting our stop. We just needed to trade around $31 per share. That's incredibly likely by expiration. So, got 28 days. Not ideal, but it happens. And that's one of the nice things about looking at your losing trades and adjusting before 21 days to expiration is they still have some value. And if you can scratch the trade and just break even, I would rather do that than, rolling the trade. You can sometimes take in an additional credit and give you more time to be right. But if the stock is already giving me trouble and it's in an upward trend, I was hesitant about putting it on. So I would rather just get out of the trade, breaking even, and moving on to the next trade. So APLS, 90 call. Man, not looking good. I don't like that candle. So we took in $2.75, paid out $1.60, $1.15 net credit. So this time, we already have this at 50-cent debit. So why don't we try this at $1.10? So we'll make a nickel, which will help offset the commissions we paid on the trade. TGTX, not too concerned if it's $100 or less of a loss on the PLO open because options swing pretty wildly from day to day, but let's take a look at it anyway. TGTX, 25 call. Okay. Up here, hopefully it will double top, meaning when it hits either 2209 to 2291, it will double top it and then reverse direction and fall back down to the mean, at which point we'll get stopped out or our limit order will be triggered. So, okay. And then on my winning trades, except for SPY, I'm not putting any stop limit orders on SPX. because they're very short duration. It's kind of either max gain or max loss proposition. Now, I did, however, the 4120 put on SPX. Let's just switch there. Because it's a short-term trade, I was looking at the 5-minute. When I looked at it, it was around like here, and I'm like, So I put on a limit order to get out at a 50-cent debit, but I took in, wanting to say like $1.90. So it was still a profitable trade. It was just too close to my short strike for comfort. So I thought it best just to close it out. I also entered the April 24th with 3 days to expiration. And if you think about it, the theta decay works over the weekend, right? So I sold the 4100, bought the 4095. But if you look at the theta on the 4100, I think at the time when I put the trade on, it was sitting around a theta of minus $2. So over the weekend, I'm going to lose $4 approximately in theta, and it's only worth around $4.80 at the midpoint. So theoretically, my short put at 4100 will be worth approximately 70 cents come Monday. So I will have captured a significant amount of the premium over the weekend. So trying that strategy to see how well it works. Plus it's at a 22 delta with a 77.7 Provo TM. So once again, it was the 4100. Looking at the chart, it's not even on the graph here. So if we look at like a 10-minute, not even on the 10. What about a 15? Oh, okay, 30-minute. There we go. So down here, so we still have quite a bit of cushion, and I think I did an iron condor with the 4165 and 4170. So I have a short call at 4165 and a long call at 4170. So I'm capturing premium. This is basically an iron condor. So as long as SPX stays in between my short strikes, then I'll capture the full net credit from when I put on the iron condor. So kind of enjoying this. These short trades, we'll see how profitable they are in the long term. But SPY, let's go ahead and put on a limit order. So we collected 234, paid out 69, put it in around 50% of our net credit. So around 8250. I like to do round numbers. So let's do it at 75. I like psychological numbers where 75 cents is common in terms of like a quarter, right? So 75 cents is 3 quarters. You can also do like 70 cents or 80 cents, but whatever your preference is. So I put that on, so now all except SPX is on autopilot. Oh, also VKTX was my biggest loser. And remember, I put on a limit order to get out at the max, at the net credit I received. So instead of taking a $310 or whatever, $250 loss, or even a $400 loss, the difference between the strikes, 25 and 21, I ended up breaking even, basically. So that's the power of managing your trades early. Now, let's just see. So the short strike was the 21 call, VKTX. Yeah, so it's actually rallying today, but I think we got out at the open when it got a little lower, went down. We got out of the trade, and then it resumed a rally. So I'm really grateful to be out of this trade, as it's just doing very well to the upside. So probably shouldn't have gotten this trade to begin with, but hey, at least I got out where I got in. So looking at the scan, feel free to pause the video and look at the various variables I have set up. So stock volume 250,000, stock mark at $15 or more. You could drop that down to like $10, or I just don't trade less than $10 for the underlying. And then option open interest, at least 50, option volume, minimum 100. And to add those, you just click add filter, and then stock, option, fundamental. So stock, right? So add filter, stock, and then volume, and then you just type it in here, hit enter, and just kind of repeat that process for the other ones. I'll probably end up making a separate video on how I find stocks to scan through for potential trade entries. Oops. I think I got rid of, I think it was the volume one. Volume is at the bottom. Yeah, I guess it's alphabetical. Okay, so we'll just run the scan. Actually, it's giving me a warning about 2,000 potential results. So I drop it down to 500, which should be plenty for our needs. Okay, so then come over here, hit watch list, save watch list, and so 2023, April 21st. And then come over here on your watch list pane, hit the drop down, and right here is the one we just created. And then hit charts. You also want to make sure that right here you have this linked to red, and you have this linked to red, so that when you click on a symbol in your watch list, it populates in your graph or chart. Okay, so let's start looking for a new candidate. So AI, if you've watched my previous videos, we were in this for a few days, then we got out with a nice gain. As predicted, the price is now touching this support level. And once again, the more times the price touches the support level, the stronger it becomes. So, and then if it closes below this support line, then the target price will be the difference between the support and the resistance. So some people like to use the wick to figure that out. I prefer the more conservative approach and just use the body. So from 28.43 down to around 20.45. All right, so roughly $8 or so to the downside. So from 20 probably down to around 12-ish, give or take, would be the target price on AI if and when it closes below the support. Okay. So looks like DKNG is not cooperating. And yeah, making me nervous now. So let's go back here, sort alphabetically. So 33 cents, net credit. Let's get out where we paid. I don't like scratching trades, but I like losing money even less. So between those two, I'll scratch trades all day long. This one, I think we've had $5 of movement, but it is in a strong downward trend. But the stochastic tells me we're probably going to rally a little bit before we resume the downward slide. So if anything, you could add DOCN to, to the almost ready watch list. Yeah, so if I saw the chart back here around like April 14th or 15th, that would have been a better entry. Let's see, what is a 12 strike? Just curious. Yeah, not any money. Never mind. Won't work. Okay, so Domo. I like MACD. I like the stochastic. IV's 63. So what about like a 20 strike? So it hasn't gone above 20 pretty much all year. And of course, there's no money. What about the 19? See, this is the problem with low volume stock that just doesn't have a lot of option volume. So I don't know how this showed up in the scan results. It should have at least 100 option volume. So say if we do the 19, the 24, yeah, no. Not even a credit, it's a nickel debit. Moving on. Domo arigato, Mr. Roboto. Oh, we're already in this one. So we should be getting out here soon at our limit. Tempted to put on another trade, but that would be breaking one of my major rules of only having one position on any given underlier at a time. So if looking at ALB, if we were in a bullish market and it was looking like this, I would consider putting on a bull put spread. So you might want to wait for it to show some signs of strength so you're not catching a falling knife here. 160, 155, but that's a 28 here. Looking at the delta of a 17 delta, so 150, sell the 150, buy the 145. Definitely over 10% is probably like a 17%. So 77 divided by 4.18%. 18%. So it's the 150. Also, if you look here, this is what it's the implied volatility, and it's telling you how much of a price movement it's guessing within the expiration. So in the next 28 days, they're expecting it to move $21.84. So why don't we do this? Add this to our almost ready watch list. And I would like to show you some bull put spreads. It's basically the inverse of a bear call spread. Yeah, really not much out there today. And I've had several positions close out at the 50% net credit, and it's returned some option buying power. So I've got money to spend, just not finding any trades. Well, of course, anything that looks remotely good seems to be in an upward trend. Like if it were in a downward trend and stochastic and MACD look like this, I would be more inclined to trade it. Excuse me. So Now, okay, so I do like the price chart. We're in a downward trend. MACD's above the zero line. I would rather see it up here at this level or this level, right? So I like to see the MACD at the previous levels where the price reversed. But I do like this candle setup where you have a shooting star and a down day. Stochastics crossed heading lower. What is the 95 or the 100 going for? Okay, so we'll get more credit because more risk will be taking on. So what about... Yeah, no. So the only thing that would work from a bear call perspective would be the 95-100. Now, you could look at the 95-105, but you'd be risking 900 to make 98, right? So here, let me show you real quick. 98 divided by 902. That's 10.8% return on capital. Or doing the 95-100, we have 79 divided by 421, 18%. And you're only risking 421 per contract. So yeah, I think I'll stick with the 5 white strikes. We can do 2 contracts. GTC, always change it to GTC. Hit send. Once again, the 95 up here. I generally like more of a buffer between the current price and my short strike. But looking at the strong downward trend and with the current price pattern, candlestick pattern, pretty comfortable even with the 95 short call or bear call spread. 95-100, I should say. Okay, so the problem here is we're getting into the lower IV stock, so it's going to be hard finding a bear call spread with 10% return on capital and taking on an acceptable level of risk. So the higher the IV, the more expensive the options will be, and that translates into more of a price buffer. So it gives you a little more wiggle room if the underlier moves against you. So it's kind of like if you're a pilot and you have a lot of altitude between you and the ground, you've got some wiggle room before you smash into the earth. So similar concept. I think that's it for the day. Actually, for those of you that hung out, let's take a look at SPX, as this is my new thing I'm trying out. I thought it would take you long on my SPX 0DTE journey. So, yeah, we're pretty lucky. We haven't had much volume or price movement since we started trading it. But say if we started trading it over here and then this happened, would have been, a little painful. So, but because we are only in the trade for between 0 and 3, maybe 4 days, you want to look at a shorter time frame. So I'm not sure what chart would work best with this strategy. So generally speaking, the more data points you have, the better off you are. So look at the chart for the 15-day 5-minute right here, as opposed to the 1-day 5-minute, right? So it went from being in an upward trend to a downward trend, and your LRC levels changed considerably. So maybe something like a 5-day 5-minute, because we're in it for such a short period, maybe we should only be looking at a similar time frame. So if we're in the trade roughly 2 to 3 days, or even same day, maybe using a 5-day 5-minute might give us the sweet spot as far as data points. And when I'm putting on my iron condors or my bear call or bull put spreads, you can either leg into it or put it on at the same time. So just real quick, I know we're a little over, but you might find this interesting. So I generally prefer to leg in to my iron condors. So for example, just using this day as an example, you could have waited from the open for it to run up here, touch the top LRC, then sell your bull call spread around like 4170, and then keep an eye on it, and then it sells off, it hit the mean, and keeps going, hits the lower LRC, and then you could have sold a bull put spread like around the 4100. So you legged in, and because it's closer to your short strike, you collect more premium, right? But say if we entered it here when it was at the mean, we wouldn't have collected as much in premium. And another benefit of, say, selling your bear call spread right here is the 17 delta will be higher up, giving you more of a cushion. But if you sold the 17 delta right here, it probably would have been closer to this top LRC price level, right? So you sold it here and you're getting nervous. You're like, uh-oh, what if it keeps going higher, right? That's a terrible feeling. So being a little patient and just analyzing the chart, what is it telling you, and not guessing, right? The chart doesn't care about your opinions. Now, as you build your experience level, you will have similar experiences that you can remember from past trades. And it's like, well, I remember last time this happened, SPX did this. So maybe we'll do that again. But do your best just to step back and have a third-party perspective on what is happening with the price, with the indicators, what are they telling me, and then make your educated guess there. So it's fairly uncommon for it to touch the upper and lower LRC in the same day. So, but if you were just trading all day, you could have totally done that on this day of SPX, right? So for the last 5 days, that's only happened once. And what if we look at like the 15-day 5-minute? So, I mean, it gapped up higher. Granted, it kind of skews the LRC quite a bit when you have so many days, because even like the 15-day 5-minute looks considerably different than the 5-day 5-minute. So I'm going to stick with the 5-day 5-minute for the time being on my short DTE strategy. I don't know if I like the 0 DTE, but I'll trade from 0 on up to like a 3 or a 4 DTE and see which one I have the best luck with using my mean reversion strategy. So hopefully you continue on my adventure trading options and you learn something in the process. Thanks for commenting below. Like, share, and subscribe. Thanks and happy trading.